Rick Santelli here, live on the floor of the CME with my final guest of the week, professor at the University of Maryland, Phillip Swagel, former IMF economist, former Federal Reserve economist, former Assistant Secretary of Treasury. Quite a resume, Professor. Listen, we'll get right into it. We had a hotter than expected PPI, up 0.6 on headline, up 0.5 on core. Some of the year-over-year is getting hotter. Any quick thoughts on how that might play into yesterday's Fed meeting, no rate hike, and ongoing policy of tapping the brake?
Yeah, I mean, it looks like the Fed is pretty locked into December. Obviously, the PPI running hot, as you said, will help lock them in. The CPI next week, probably is going to be a touch on the hot side. Just some reversal from the previous months. The Fed's going to go. For me, the question is, what do they do in March?
I got you. Now, digging down, one of the papers that I read that you recently penned started out with a line, all downhill from here. Explain.
Yeah, we've had, two great quarters, right? Over 4% and then 3.5% on GDP growth. My concern is that I really want to see business investment kick in for us to sustain this. And for the U.S. economy to sustain 3% growth or better, to sustain the upshift we've seen in the last 2 years, we got to take care of some of the impediments to growth, right? The trade war, even with the Keystone XL pipeline, right? What the judge is doing there, that's got to be an impediment to business investment as well. So take care of those things so we can get business investment back in gear.
Now, when you say impediment, if I was an investor, here's what I'd be thinking. The fact that you think it may be all downhill from here, can it be reversed? In other words, are these impediments over time, if they slowly become less of an impedance to the economy and they get solved or worked out, will there be enough time in this business cycle to put that into GDP dollars?
Yeah, there is. I mean, the first half of the year, if some of this stuff gets worked out, that's fine, right? I mean, the trade war, we worked that out. At least come to some agreement with China where they changed their practices. That's fine. Business investment can still kick in. So we still have time. It's not like it's sharply downhill from here. I just want to see us do things to sustain growth at 3%.
Well, Professor, we're almost out of time, so let's do this really quick. I look at oil dropping. Every average American I know has got a big smile about it. It isn't necessarily good for the investing community. The strong dollar, all multinationals complain about it. The average guy can buy a whole lot more. Imports keep coming in. With regard to FX, what are your thoughts?
Yeah, no, I agree with you. The strong dollar, it's good, right? It's a sign of the strong U.S. economy. It'll keep inflation low. It'll keep the Fed on hold, at least, maybe a little bit into next year. On net, that's good, even with what it does to our trade balance.